Welcome to the session on Oracle Retail Stock Ledger. The merchandising stock ledger is responsible for tracking all merchandise-related financial transactions for a retailer. This includes transactions such as receiving, sales, price changes, transfers, and inventory adjustments. At the end of each business day, the transactions for the day are summarized to the subclass location level into what is referred to as daily data. Additionally, at the end of the month and optional week, the information is further summarized to the month data and weekly data respectively. The merchandising stock ledger supports an organizational operating with multiple currencies. Transactions are initially recorded in the location's currency and then in the stock ledger daily, weekly, and monthly processing. The data is held in both primary and local currency. At the end of either the day or the month, stock ledger information is sent to the general ledger. For retailers using cloud financials, EBS, or PeopleSoft financials, packaged integration for merchandising exists to support this process. Multiple set of books, or multi-ledger functionality, allows retailers to maintain separate currencies and chart of accounts for each entity in the general ledger. Retailers that use multiple set of books assign merchandising locations to a particular set of books defined in the retailer's external financial system. For example, one set of books may be created for each country of operation. Changes to the stock ledger affect the set of books with which a particular transaction is associated. The merchandising stock ledger supports both retail and cost accounting methods within the system. In fact, it allows both retail and cost accounting to be practiced simultaneously as the determination of the method used is made at the department level. Most retailers, however, practice one method, either cost or retail, across all of their departments. For the cost method, two types are supported, average cost and standard cost. Merchandising also supports visibility to both cost and retail valuations of inventory, as both cost and retail are captured for most transactions in merchandising regardless of the accounting method. These different accounting methods will be discussed in more detail in the next slides. First, we'll take a look at retail method in a bit more detail. The retail method of accounting is the method by which inventory is valued using retail price amount. Purchases of merchandise are recorded at actual cost, and all purchases, transfers, sales, and RTVs are recorded at the retailer in order to calculate the value of inventory. The retail method also takes into account markdowns, markups, markdown and cancellations, and markup cancellations in the inventory calculations, because these adjustments in the retail price affect the value of inventory. Cost for ending inventory and cost of sales are estimated based on a percent of retail value at the subclass level using a historical ratio of inventory at the cost to inventory at retail that is used to calculate what is called the cumulative mark-on percent. Closing stock at cost is calculated as a percent of closing stock at retail using cumulative mark-on percent. The cost method, on the other hand, is the method of accounting in which the value of the inventory is based on the cost of the merchandise. Under this method, the retail price is used in margin calculations only. Item level margins can be calculated under this method because costs are determined at the item level. Merchandising supports two types of cost accounting, average cost and standard cost. For average cost, inventory value is calculated based on a moving weighted average of receipt cost. For standard cost, this inventory value is calculated based on the current primary supplier purchase cost. We will look at each of these methods in a bit more detail. First is the average cost method. Average cost is the method by which the cost of an item at a location is weighted based on the number of units received at their specific cost. This cost is also sometimes referred to as weighted average cost, or WAC, or moving weighted average cost, MWAC because it is updated each time inventory is received into a location. The WAC is the value of each unit of inventory at a location and is used to determine the cost of sale for an item sold at the location. It is also used at the cost for all transactions that occur for the location, which are written to the transaction level stock ledger. In general, with this method, the most important thing is to keep WAC as accurate as possible. WAC is recalculated whenever a transaction is processed for a location at a cost different than the current WAC. This includes PO receipts, receiver unit adjustments, receiver cost adjustments, and transfer shipments. WAC can also be updated in merchandising outside of the transactional update if adjustments are needed. This will generate a cost variance record in the stock ledger. The second type of cost accounting that is supported by merchandising is the standard cost method. Standard cost is defined as the last or current primary supplier cost. Under this method, inventory is valued using standard cost rather than WAC. This costing method works similar to WAC in that the standard cost is the cost used when updating the transaction level stock ledger and is also used for the cost of sales. The biggest difference between the two methods is the way the cost is updated in the system. The standard cost can only be updated by doing a supplier cost change within the merchandising. Changing the primary supplier cost for an item will result in a change in the value of the inventory for that item at all locations, impacted by the cost change. In the standard cost method, if a transaction occurs with a cost different from the standard cost, a transaction is written similar to a markup or markdown in the retail method. This difference in cost is recorded as cost variance in the stock ledger. For all accounting or inventory valuations methods, inventory transactions in merchandising are recorded as transaction data at the item location level. Each transaction is assigned a code and is recorded with the cost, retail, and units involved in the transaction, where applicable. For example, markdowns don't include a cost value and cost variances don't include retail. Additional data is normally also recorded with these information to support audit trail, reporting, or interface requirements such as PO number, a reason code, and other similar attributes of the transaction. At the end of the day, the transaction data is summarized to the subclass location day to create the daily stock ledger record. Daily data has no calculated fields or inventory positions. It is only a summary of data from the transaction level. Days on this table continue to be updated for late posting transactions until the month in which the day exists is closed. Holding week level stock ledger data is optional in merchandising and is only possible if the system settings are set for a 4-5-4 calendar. If data is kept, then at the end of each week, daily data is summarized to the subclass location week. End of period calculations such as ending inventory and shrink are calculated in the end of week process as well. Like daily data, transactions continue to be posted to close weeks until the month is closed in order to account for late transactions. Month data is calculated by summarizing daily data at the subclass location month. At the end of the month, additional calculations such as ending inventory, margin, shrink, etc. are calculated. Unlike daily and weekly data, once a month is closed, transactions can no longer be posted to that month. All transactions created after the month is closed will be posted to the current open month. The summarized information for half data holds shrink, sales, and shrink rates that have been recorded between unit and value counts. This is the updated by stock ledger count process that books adjustments to the stock ledger. This concludes our session on Oracle Retail Stock Ledger.